This is a once in a lifetime, once in a generation opportunity to build enormous wealth. And those of us who deeply understand it, feel that and are convicted about that in our bones, that we're going to end up with all the marbles and be incredibly rich. It's going to be gross. There's no free lunch in the world. You want that reward, you got to handle 50 to 70% drawdowns.
These are very successful folks, and they're older. They've seen the cycles. Now I got a 50% drawdown. Maybe now is the time.
Every time we see Bitcoin come out of bear market and go into a bull market, we see all these people on YouTube who are experts, and we go, "What the hell is that?" And then when Bitcoin goes in the toilet, all their shows are gone.
Welcome to episode 5 of the Bitcoin Boomers. I'm Bob Burnett. I'm here with my buddies Gary Leland and Larry Lepard. And this is our 5th episode, guys. And yeah, so we're starting to put together a little portfolio here. And our first solo one, though. So we'll see if we can keep people entertained. There's a lot of things to talk about. We've got the Nancy Guthrie story, which Bitcoin has woven into. We've got certainly the price to talk about. Gary's got his Bitcoin Bit Boom conference coming up soon that we'll all be at, and of course some things happening in the mining world that are probably things that some people might want to hear about. So anyway, like this maybe get started on the Nancy Guthrie thing. Anybody want to start there? Any interesting thoughts about Nancy?
This just seems like, and this is a terrible situation, so don't get me wrong. I mean, I would die at that, my mom, if she was alive. But taken off on this, so much FOMO has been created about how Bitcoin's being used by criminals and the cartels. And haven't we heard this since Bitcoin was created? And isn't it the most trackable thing there is? I mean, when you really get down to it, I mean, I don't know where that's coming from. I was watching a clip Mel sent, and it had these, I guess, experts on, I don't know, it's NBC, CNN, or whatever. And one of the experts said, they asked me, said, "Well, I really don't know much about Bitcoin, but I think all cartels use it." And I'm going, why would they have them on there if they're admitting they don't know much about Bitcoin as the expert? It seems like they're just pulling out all this stuff to make us scared for some reason without doing any research. I mean, am I alone in my feelings on that? That this is the same old song and dance and, that we hear every 3 or 4 years about Bitcoin.
Yeah. It's unclear. I mean, whether it's a conspiracy or whether it's just stupidity on their part, it's kind of a toss up, right? It's unfortunate though. I mean, it does, revisit or revive the, Bitcoin is used by criminals argument, but guess what? Cash is used by criminals too. The drug trade, they're shipping bricks of cash around and bricks of cocaine and all this, I don't know. To me, it's what a tragic and unfortunate situation, and also unfortunate that Bitcoin gets mentioned. On the other hand, you could argue there's a Streisand effect. Any publicity is good publicity.
Yeah.
You want to move a lot of money, and you want to have something that everybody knows what it is these days. Well, Bitcoin's actually beginning to qualify. So I don't know. It's the whole thing is just tragic.
Yeah,
kind of like P.T. Bailey said, just say anything you want about me, but get my name right. Spell my name.
Exactly.
Well, Gary, you were talking about the interview that you saw, and you said one of the quote unquote experts said something to the effect of, "I think," and experts typically don't say "I think," they say "I know," and so, and I think that's one of the problems with Bitcoin is determining who the experts are is difficult, especially for somebody that's completely outside of it. And we haven't established who those people are. I just saw as well, in a similar note, Trump announced a new panel kind of overseeing crypto and online prediction markets. And they had people like the CEO of FanDuel on there, which is predictable, but there wasn't there was 25 people, not a single Bitcoin person on there. But we had the CEO of Ripple, Brad Garlinghouse, and the head of the Solana Foundation, the head of the Chainlink Group, Brian Armstrong from Coinbase. Now, some of those people obviously do know some things about Bitcoin, but they all have an agenda. Yet you basically, though, you have 25 people in this group, and the most significant asset doesn't have a representative. There
were no maxes on the list. Huh?
Yeah. But I mean, the reason I bring it up though is just, because of this. Like, I don't even think the media knows who to reach out to, because like going way back to my PC days, when there were times when, for whatever reason, the personal computer would come into, mainstream thought, and, they would seek out CEOs and executives from Dell and Gateway and IBM and places like that. And I'd occasionally find myself on CNN or, something like that if I was the best person from the company. But for Bitcoin, we don't have a CEO. We don't have a PR department. And maybe that's a problem sometimes.
That's probably why companies like things like XRP have grown so fast. I mean, they have a big advertising budget, I'm sure.
Yeah, it's unfortunate. I mean, shitcoins have been a bane of our existence for a long, long time, and they continue to hang around the rim, right?
Well, speaking on this, Bob, on the subject, I was at the Dallas Bitcoin meetup last night, and I rarely go to meetups. I think that's the second one I've been to since BitBlock Boom locally. I just stopped going for some reason, but I met a gal there who had sold her gold like 3 months ago and bought Bitcoin at the high. And she's going, God, what an idiot I am. What an idiot. And I'm, just trying to give her a little reassurance saying, while you might feel like an idiot now, in 5 years, I'm sure you'll feel like a genius. But she was going, I don't know who to listen to. I see all these shows that tell me everybody's saying Bitcoin was going to go to 180 because they got a lot of Bitcoin. I said, well, those particular people probably have sold their Bitcoin then. So I don't have to worry about them. And I was trying to tell her, and this is true. I guarantee both of you are going to agree with me. Every time we see Bitcoin come out of bear market and go into a bull market, we see all these people on YouTube who are experts, and we go, who the hell is that? Because I feel like I know most people, if not necessarily in person, but I know who they are. And I'm going, who is this expert? Like Ty or whatever a few years ago came on. And then when Bitcoin goes in the toilet, all their shows are gone, and they just disappear. And then magically 3 years later, 4 years later, here's all these new experts that no one knows. I mean, am I wrong on that?
Sounds about right.
Yeah. So if you're new and you come in when all those experts are on there, you don't know who to listen to, and you may listen to those experts, so-called experts that are experts until Bitcoin drops in price. And their numbers aren't there anymore for followers.
Yeah, I think, classically, I think what happens too is I think a lot of media gravitates to people that have a financial angle. Like they kind of categorize this in that space. And I've run into it a million times, arguments in Twitter or in person with somebody who's a financial advisor or a wealth advisor and thinks that they are the classic Dunning-Kruger curve people, standing on the top of Mount Stupid, thinking that they have.
I'm gonna steal that. I like that.
Thinking they have a comprehensive view of Bitcoin and that it's a scam or it's a Ponzi or it's a speculative asset, and they throw this sort of banter around without really any true knowledge of what it is or how
I don't know
works.
anything about it, but you're wrong, right?
Yes. Yeah. Well, actually, no. I know everything there is that's pertinent about it.
And you're still wrong. Yeah.
And yeah.
When they don't really know everything, it's pertinent. Yeah. No, I mean, we say they don't know anything about it. Yeah.
Yeah.
And I still think this is the use case, I think.
Yeah.
Well, there is no use case. There is no intrinsic value. There is no cash flow. There's these are the things that they will,
you can't spend it anywhere.
Well, yeah. And they don't know how to evaluate it and measurement. They don't have the technical chops to do it. Although I will say it's changing somewhat. That I may have shared this story before. Sorry for repeating it, but I have a good friend who's an executive at Morgan Stanley, and he reached out to me probably 6-8 weeks ago now, and after 5 years, he came to me and said, "Hey, we're all in now."
Good.
And he said he made a request to me that I was kind of surprised by. He said, "Hey," he oversees a really large team. He said he's got like 300 people, and he said, I want you to create a Bitcoin uh, exam for me, a quiz for me." Said, I want 5 questions. Said, I don't want them super hard, but I don't want them to be exactly layups either. And I want to give it to my team so that they realize they're not ready and they have to pour in the work. So I did 5 questions, and a couple of them were harder than others, but one of them was simple, like, what is the supply of Bitcoin? But basically said
Tell us the
nobody
other
got.
4. Tell us all
If you get
5.
into difficulty,
I can look it up as we
That's okay.
talk. I don't remember them all off the
I
top
just
of my
was
head.
curious.
Um,
So most
but
of them didn't know the supply.
but they were getting like 1 of 5 right. Like nobody did well, and
yeah,
and but they. I'm saying he speaks for Morgan Stanley in this case. There's a recognition that they're behind, that they don't know, and they have to know. So that was the purpose of the quiz, was to get them to do that. But it's going to take time. I think that on this Nancy Guthrie story, I guess kind of where we started too, you should probably explain to people why this may not be a great strategy, right? That if let's say I send Gary $6 million of Bitcoin right now, and we do it as a Bitcoin, this is a Bitcoin transaction. Well, nobody. Well, I'm not doing a good job articulating this for some reason, but anyway, I send the Bitcoin to Gary to his address.
Well, we can
As
do
a-
an example. Send me some
Yeah.
now.
Yeah, okay. Let's do it live. I send Gary some Bitcoin. Now, Gary wants to do something with it at some point. So he buys something from Larry. And let's even say it's still on the Bitcoin. It's all purely Bitcoin transactions. But now Larry and Gary are connected. At some point, Larry does something with it. Well, at some point, it reaches somebody who maybe wants to be on an exchange, and they want to turn it into dollars or something more tangible. Well, they can start reversing that chain and start tracing back.
But they don't necessarily have to go that far, I don't believe, Bob. I can send it to Larry, and maybe Larry has sent Bitcoin from his wallet to Coinbase.
Yeah.
And so now that
That's all.
wallet's basically Larry's wallet. And they go, oh, Larry got some of that
Fair
Bitcoin
enough.
from the Guthries. And they go visit Larry.
Yeah.
And go, who sent you this Bitcoin?
Yeah. So I think the FBI and the CIA have stated they love Bitcoin because it's
And
traceable.
even after years, y'all remember that story about that that guy, I can't remember the exact details. That guy and his girlfriend, they stole a bunch of Bitcoin, millions of dollars worth of Bitcoin, and then years later, 6 years, 7 years later, or something, they spent some, and they nailed them, took all their Bitcoin, and they went to prison. So I mean, they waited a long time to do that.
Yeah, I think, was that like a Canadian exchange or something like that?
Yes, I think so.
I think so.
But-
Yeah.
Yeah. So there's a trail there they can follow of the Bitcoin, and you have to get it out sooner or later. You're going to spend, or you just got $6 million going, I got $6 million here. I can't spend any of it, So somewhere it's going to come back to you. But that's a terrible situation for sure, though. But it's not this thing that criminals, also a thing I saw the other day, guys, was maybe I saw this, I can't remember what channel it was. They were talking about the situation, and evidently someone sent money to the wallet, or Bitcoin to the wallet, like a few $100s. And they were talking on their show about these people that knew so much about Bitcoin, how they thought that was some kind of test that the FBI did because they have special tools that we don't know about that by sending that $600, they could go ahead and probably find out who owned the wallet. And as you and I, as we all know, if they're going to ask for $6 million, they probably got a wallet that's not connected to anything. I
Right.
mean, unless they were just checking to see if they were stupid, because it could always luck up and they were just stupid. So I thought that was interesting how they knew about these secret tools the FBI had for figuring out whose wallet that was.
Yeah.
Was
Well,
it
the records are immutable, so that's one of the issues that goes with it. Why don't we shift over to talking about the price? I know about you guys, but I've been getting a lot of nervous people that are newer in the space coming to me, looking at the price action and wondering if the thesis is broken or they've made a mistake or,
And you get older ones like my wife.
yeah, whatever. Yeah, all the above. Yeah, I've had a little of that too. All the above. And I don't know, I guess maybe because I've been around it since 13 or 14 and since I watched it go from 17 to 9 and then 3 or 4 and then we watched it go from 65 to 15 and all this stuff. I mean, I'm pretty sanguine about the price. And it kind of reminds me, it's as Sailor says, it's digital capital. It's a very volatile asset, and you have to be willing to hold it on a 10-year time frame. And I've always told people who are looking to get into it, they ask how much should I buy? I say you got to be, no matter how much you buy, you got to be willing to endure a 50% drawdown. Actually, probably a tad more than that. But, as we both all know, we've had 90, 80, 70, 70, 60% drawdowns in the past. This drawdown right now, we're kind of 50% down from the high in October. My sense is we could go 60% down. I don't think we're going to go 70 down. And we'll talk about why in a minute. But to me, what's going on here is it's just classic, fear and greed investor behavior that's as old as time. I mean, this is Buffett's, Mr. Market is he's a manic depressive. And, at 125, people are chasing Bitcoin. It's going to 250, and at 67, nobody wants it and it's going to zero. And there's a good study that I tried to get a copy of it, but turns out it was pre-chat GPT. Chat GPT refers to it, but they can't show me the original study. But I remember they summarize it. And the study is back in the 70s and 80s, there was a guy named Peter Lynch who ran the Magellan Fund. From 1977 to 1990, Magellan had a 29% compound annual rate of return, which truly puts him in,
insane?
Buffett-like stock picking categories. It was a fabulous fund. I mean, anyone who put money in it early and hung on to it just made a fortune. And Fidelity actually went back and studied all their customers and holders of the Fidelity Magellan Fund, and they found that 50% of the people who at one point held the Magellan Fund did not make any money. They made zero money. And the average return for the average person who invested in the Magellan Fund was 7%. So let's just think about how that happened. The ones who didn't make any money, they chased the Magellan Fund when it was doing well. They're like, this is great. I got to buy it. And they were chasing the high. And then when it turned down, they're like, oh my God, I made a mistake. I got to sell it. Right. And everybody, it turns out, did so, or not everybody. On average, most people did some version of that, because if you had bought it in the beginning and held it to the end, your compound IRR would have been 29%. But the average they found of all their customers over all those years was 7%. And so I guess what I'm trying to say is that human nature, almost wires us to make investment mistakes, which is to say we chase price and we throw up on deep value. And this is how great investing fortunes have been made, for decades and centuries, which is, the blood is running in the streets. You buy deep value and you sell over valuation. I'm not suggesting you ever sell Bitcoin, but I'm pointing out that, there are these metrics that we use to determine what is great value and what's not great value. And right now, Bitcoin is in that great value zone. I retweeted it this morning. It's James Check's work, and it fits with the Tipmeyer multiple that right now, comparing the Bitcoin price to the 200-day moving average, we're at either 6% or 10%, depending upon whose numbers you use. It's only been this cheap 6 to 10% of the time. In other words, 90% of the time, it's been more expensive than it is right now. The other model I use this power law model, which Giovanni and Kruger have worked up, which shows that, they've drawn a curved line, log of time, log of price, that shows the price of Bitcoin over, its entire life. And they've managed to fit this curve to the data 96% R squared, which anyone who's familiar with statistics knows that's good correlation. Having said that, it also varies a lot around the mean. It's a volatile asset. And, through all of its cycles, sometimes it trades at two standard deviations above the power law number. At its cheapest, it goes to one half a standard deviation below the power law number. It's never broken that. Right now, the power law mean says it should be trading at about 120, 130, somewhere in there. And half of that, half a standard deviation below that is 50 to 55. And so we're almost there. So, on both those measures, Bitcoin is extraordinarily cheap. I've been buying it. I've been selling gold and silver things to buy it. And I've been buying MicroStrategy as well, in size, actually, on both of those buys, just because gold and silver have taken off. And to me, what they're saying is, the big print's coming. The Fed's going to have to, debase the currency. And I think it's interesting they picked this guy Warsh, who's a hawk. I mean, it's a brilliant political move. Pick a hawk to do something really dovish. And they got him to buy in on he's going to have to be dovish. But because he's a hawk, he'll be able to sell it, right? And so that's coming, and gold and silver smell it. And Bitcoin's just on this lag program like it was in 2020. I've said this in other pods, I'll say it again. I mean, in 2020, I remember it very well because I own both Bitcoin and a lot of gold and silver, as most people know. And in 2020, when Powell pivoted and then, gold took off, it went up 50%. And from, I don't know, I think it was 1,200 around 2,000 back at the time. And all this, and gold stocks went up a lot. I thought did well. We were all feeling great. And Bitcoin was just bumping along between 5 and 9, kind of averaging 7. And then all the liquidity hit. Powell grew the balance sheet from, 3 trillion up to something trillion to, 9 trillion. And it's just crazy. And it all came flowing into the system that summer. In October, Bitcoin went from 10 to 60. X. It took like 6 months. It was really quick.
Blockstream Jade is your easy-to-use, Bitcoin-only cold storage solution made for both experts and beginners alike. Its simple, clean interface makes it a great gift to friends and family just starting down their Bitcoin journey. The open-source hardware of the Jade combined with the open-source software of the Blockstream app means full transparency. Like Bitcoin itself, you never have to trust and can always verify. And at an affordable price, the Blockstream Jade allows you to safeguard your future without breaking the bank. Buy 2, 3, or 4 Jade Classics together and get up to 25% off this holiday season. Plus, get 10% off any Jade with the code BOOMERS. Open source, transparent, Bitcoin only. Blockstream. Peace of mind without compromise. The more your Bitcoin holdings grow, the more complex your challenges become. What started as simple self-custody now involves family legacy planning, sophisticated security decisions, and navigating situations where a single mistake could cost generations of wealth. Standard services weren't built for these high-stakes realities. That's why long-term investors choose Unchained Signature, a premium private client service for serious Bitcoin holders who want expert guidance, resilient custody, and an enduring partnership. With Signature, you're paired with your own dedicated account manager, someone who understands your goals and helps you every step of the way. You get white glove onboarding, same-day emergency support, personalized education, reduced trading fees, and priority access to exclusive events and features. And Unchained's collaborative custody model is designed to provide the same security posture as the world's biggest Bitcoin custodians, but for those who prefer to hold their own keys. Learn more about Unchained Signature at unchained.com/BTCboomers. Use code BOOMERS10 at checkout to get 10% off your first year. Because Bitcoin isn't just for life, it's for generations.
And that's the way this asset trades. And so, when this next big print hits, that's what's going to happen again. We're going to go from 50 or 60 or 70 to 240. 300 or some big number.
Well, they're going to print a lot this year. I mean,
well, they're already they started printing. I mean, they pivoted, right? They were tightening, then they stopped. Now they've got this reserve management program, which I think that's hilarious. It's just rebranding QE, right? They're saying, well, the banks need some reserves, so we're going to inject 40 billion a month in. Well, of course, that's going to have to grow, and that's just a mathematical fact. That's not some opinion. That's just mathematically proven that they will have to grow the money supply or the bank reserves.
Did you say 40 billion a month?
Yeah, they're doing 40 billion a month, which is 480 a year, which Lynn has called the gradual print, playing off my book. And I'm like, yeah. And I responded to her on Twitter. I said, yeah, Lynn, but gradual can become big. And that's what I think is going to happen. So I don't know. I guess the point I'm trying to make is I think there are a lot of people. I had a call yesterday from a really good guy, very smart investor, but he's just kind of like, Jesus, I'm really heavily into this Bitcoin and I'm getting scared. And I was just kind of like, no. But he's newer. I mean, he hasn't been around it for
Right.
10
He hasn't gone
years.
through a couple of these.
Yeah. And I said, you got to relax, man. It's all good. I mean,
I think for some people, Larry,
need the money in 3 months, you're fine. I mean, it's like, give this thing some time, right?
I think for some people, Larry, like I'm going to use my wife as an example. I use her as an example a lot. She hates it when I do that, but it's not the drawdown percentage because she's seen this but doesn't really remember it. Wasn't as big a deal. She looks at the total dollar amounts, and the dollar amount now
it's
is
a big
so
number,
high.
right?
Yeah, and she's like, "Oh my!" I said, "Well, what are you going to do when it hits 350,000 and drops to 180? And it's going to be a lot bigger number." So
Well, that's the thing. I mean, and obviously it's easy for us to say that because our average cost bases are much lower. Although I was buying it at 65 and I even bought some at 100. I didn't pay 125, but the point is that, I mean, look, it's higher highs and higher lows. I mean, that's the pattern. It's going to continue.
Yeah, I think if you, I have this chart somewhere. If you look at the volatility itself does appear to be dampening on a percentage basis. So if we look at the big drawdowns, like you referred to, Larry, the 90%, 80%, 70%, those were fairly early in Bitcoin's history. The post 2020 era is all like 50-ish,
Right.
give or take a few. So we're starting to see that gap dampen. Now it's still big, and as Gary pointed out, the dollar value difference can be shocking. Oh, Bitcoin's down $8,000 today or something like that. That
we've had a $10,000.
It only matters if you have to sell, though. If you don't have to sell,
absolutely,
and you understand what you hold, it just doesn't matter.
Your tail there reminds me, Larry, of that meme that's going around, the cartoon, and it shows two desks of people selling Bitcoin.
Yeah, right.
And one desk has 135,000, and there's just people all around it in line to buy it. And then the next to the right shows 60,000, and there's one guy,
Right.
in line buying a Bitcoin.
Well, and it's crazy. It's human nature. I guess, we're hardwired to herd, right? I mean, and there's a reason for that. Probably back in the ancient days, some animals coming to eat you, and it's like people start running. Everyone doesn't even know why they're running, but they're like, shit, they're running. I better run too.
Get on the track.
Yeah. And so, it's going crazy, and greed takes over, and oh my God, I gotta chase it. Well, then the opposite emotion is, it's going to zero and Bitcoin's dead. And, I mean, we've had,
which we've heard 100 times.
Yeah. We've had no end of the FUD stories. I mean, they've been terrible. I mean, in fact, there's a good pod I just listened to it, the quantum FUD, I mean, Preston and some others were on, I think Jeff Booth was on it. The quantum FUD was just outrageous. I mean, Bob, I'm sure you agree with me on that. I mean, there's a little bit more substance to the governance FUD, the op return stuff and the core people not really understanding that it's money. But actually, I think we had a really good development this past week on that, or I guess it was last week, when on the strategy call, Michael said, we're going to try and take a leadership role in, the governance of core and contributing to what the proper way is to evolve this protocol over time, because we've got such a big stake in it. And frankly, it's going to take that. It's going to take the BlackRocks and the strategies of the world to say, hey, this is a really important asset. We're going to protect it. And so to the degree that changes are made in it on a go forward basis, we're going to weigh in on it. And honestly, strategy's got more to lose than anybody else if it doesn't work. So I'm willing, and Michael seems to be an honest actor and a very smart guy. I think it's a huge positive that he's weighed in on this and said, we're going to stand up and take a leadership role in this area. So, and to me,
there's a lot of people who are scared of that too, though.
I know they are, but they shouldn't be. I mean, and I think,
I think he's a stand-up guy too. I mean,
and to me, that was really that's the one piece of FUD that I could see, central banks and sovereign wealth funds still being concerned about, who really governs this thing. But I think that, like that piece, just like every other piece has been dealt with over time, I think that piece will be dealt with too. the things we feared, block size stuff, all the other stuff. I mean, there's been a lot of FUD along the way, and it just kind of tends to get resolved.
Another thing on that, Larry, is I think Warren Buffett, I saw Warren Buffett say one time, the hardest thing investors have trouble doing is doing nothing.
Well, that's true too. Yeah.
And that's the hardest thing that they can do is nothing. And they just
Right.
can't do it.
Yeah. It's your emotions are your enemy in investing. And the older you get, the more cycles you see, the more you realize that. And that's where us older Bitcoiners can maybe provide some comfort and just perspective to some of these younger people who, I get it. They've got a lot in it. They've really made a bet on it. They believe in it, but they're looking at it now and they're saying, hey, hang on a second. Is this broken? And my answer is no, not at all. I mean, which is not to say, by the way, that it couldn't dip down. I think that Mel and I were talking about this pre-show. One of the issues of where the price goes is the macro landscape. I mean, and so, if we get something that breaks, and we get a correlation of one event like COVID, March 1, or Lehman in 2008, guess what? Everyone scrambles for cash and liquidity until the Fed provides it, and everything goes down, a lot. And so, I don't know what the bottom on Bitcoin in that event would be. There probably is no bottom, but my sense is I'd be very surprised if it went below 50. And so, if you're looking at it today, to buy it at 67 with a downside of, 50, it was an upside of, kind of 250 to 400 next 3-4 years. It seems to me like an incredibly asymmetric bet.
Yeah, I think I want to come back to the FUD and the governance.
But that's your area.
Yeah, but before we do that, I want to I think we should flush out the price thing just a little bit more. One of the things that I look at, my optics are different than probably a lot of people. I'm not a trader, I'm not a speculator, but what I am is a producer because I run a mining company. And I think if you zoom out and you look at a longer term lens, one of the key factors in establishing price is cost. That's true in most markets, right? The cost of something dictates the price. They're related. Bitcoin's at a weird point in its maturity where it's a commodity. But that's the first thing that's, I think, probably people don't think about enough is the fact that Bitcoin is a commodity. And the companies like mine that are mining companies, we are commodity producers. I think it's by the way, one of the reasons that the public mining companies have been grossly misvalued is they've been valued as tech and growth companies, not as commodity producers. And then they've been evaluated as technology and growth companies instead of commodity producers, because commodity producers should be valued based on their efficiency, their productivity, like those are their factors. Tech and growth tech companies are evaluated more on growth. And so that's we could go into that rabbit hole a little deeper sometime. But so what happens is right now is we have an average cost of production, my models, but a few other people have similar ones, that would somewhere be in the mid 80s to high 80s. So if you take all the mining in the world, that's what the average is. The worst ones are in the low six figures. And those tend to be the bigger public companies. And by the way, one other thing, when I talk about cost, I am not talking about the cost of electricity. There's a lot of people that think that that's all that it takes. And so they constantly look at that. But there's massive depreciation. We have labor, we have insurance, we have facility costs, we have all these other things that are part of that. Now, if we have the worst in the world, let's just call it in the low 100s, the average at 88. The best in the world are right in that $50,000 to $55,000 range per Bitcoin produced, which interestingly is the same number that Larry just said, he views as the kind of the floor, right? I mean, it was The power law was another half a standard deviation down, and there's different ways at which you arrived at that number. But I think it's a very important number to keep in mind that and Larry, you may have some perspective on this when you look at like gold and silver and how it is, whether it is properly valued or not. But that's the way I look at the world, and I view these costs of production as kind of setting a floor in the longer term. On any given day, anything can happen.
I have a question for you, Bob, too. That have you observed, and well, you watch hash carefully, and I was surprised to hear you say there are people who 100, 120K to mine a coin. Have you observed anybody taking stuff offline, and has the growth in hash slowed as a result of
Yes.
of what you're describing?
Yes. I've said we can't know why hash comes offline, right? But I just looked at it yesterday. We haven't moved. Global hash rate is where it was 6 months ago. So
Yeah.
it went up and it came down, but it's, we've essentially had no movement in global hash rate.
Prior to that, it was actually growing pretty consistently, right?
Growing meteorically. And I've said what I've said, and by the way, this has been for a couple years, it's been growing unnaturally. I think a lot of people look at it, oh, look at the growth of the hash rate, and isn't it great? And the network's more secure. So, well, not exactly. There's on the surface, yes. But what can happen is because the public companies have massive pocketbooks now, because they've been kind of following a bit of the Saylor strategy to a certain degree. What they've learned was if they deploy $100 million into new capital to expand operations, they've been getting a market cap lift of, let's just say, 200 to keep it simple. And so even though they're bleeding cash operationally, they've been able to sell shares, show the Bitcoin balance sheet growing.
Right.
And in my opinion, not giving financial, people are kind of falling for it. And they, now they might get bailed out of, I would say, sheer luck, because those same companies are pivoting to AI.
Interesting.
And what they did build, to their credit, I'm not saying they didn't do anything of value.
The power centers have value, right?
And now they've been able to redeploy the asset into something that may throw them a lifeline. But I think what we're seeing, and anecdotally through my contacts in this, I think we're seeing a lot of energy that was directed toward mining as those machines are coming offline. They're getting old, and instead of replacing them with more mining equipment, that energy is going to AI. And so I should point out, usually we see stronger growth in the winter months than we do in the summer months in hash rate. And we've had nothing this whole winter. So I think we have had some weather issues that have forced some equipment offline. We have had some, obviously, this AI issue, and people pivoting. But I think this will be very healthy for Bitcoin in the long run, to see hash rate slow for quite a while. Because if we continued in a world where the least efficient operators continued to be those that survived, eventually what that does is it forces out even the smaller private efficient operators. And I think that would be bad for Bitcoin. That if in the end all you had was a handful of really big companies that don't have any operational excellence, that lose money continually, and that just seems like a house of cards to me.
Makes sense.
It's also a very centralizing force too, that, if only the big guys live out of sheer size, then that's very centralizing. So that, I'm excited about that. I had asked you earlier, Larry, though, about kind of what do you see in the gold and silver world? Like, cost of production and are there any analogies or no?
Well, there are. I mean, it's and there were times, that there are big long cycles there, and the cost to mine an ounce is always, the cost to sell an ounce versus the cost to mine an ounce is obviously what determines the profitability. And you saw back in the, it went to 800 an ounce at in the 70s when we had all that inflation, and then it drained itself from 800 an ounce down to 250 or 300 an ounce in 2000. So that was a 20-year decline, kind of a steady decline. And at 800 an ounce, they were adding capacity like crazy because it made sense to. And what you saw was just a general attrition of the higher cost mines through that 20-year period. And now it's funny because I actually see companies going back and they're looking at companies and saying, well, this was a profitable company or profitable mine back in 1985, but they had to shut down in 1990 when the price dropped to $300 or something, right? And
Yeah.
The issue, and it's a little different than your industry, Bob, is that I mean, you can probably spin up a new Bitcoin miner in 3-6 months, certainly a year, if it takes you the time to get the power. Mining minerals is a 3 to 10 year cycle to open up a new mine. And so, so they tend to not shut them down casually, and reopening them is expensive too. So, but what you're seeing going on right now, and it's interesting because a lot of the Bitcoiners say, well, gold price is high, we're going to get a huge supply of gold. Well, yes, over 2 decades, the growth will occur, but because it takes 3 to 10 years to spin up a new mine, it doesn't happen quickly.
So Bitcoin is very interesting in that as a miner, for the most part, you can turn off instantly. So if we woke up tomorrow morning and Bitcoin was at $25,000, we could see the network, half of it turn off in a day, right?
Wow.
But on the other side, if we woke up tomorrow morning and Bitcoin's at 200,000, you would see almost no lift, right? Hash rate would be the same. Now, miners would become ungodly profitable very, very quickly because the operational costs don't change, but the cost to produce a Bitcoin would get dramatically
Eventually, there would be a lift. The question, Bob, was how long is the lag between?
Well, yeah. So to your point, in fact, Larry's part of the Bitcoin Opportunity Fund, which we've done a few partnerships together. And once we did a small project, I think it was maybe about a 0.5 megawatt project, if I remember right, in partnership with Larry's firm. And we did it in 6 weeks. So at that scale, we find an advantageous situation, we can pounce, and we can go quickly. And at a few megawatts, it may be a 6-month project. But at 100 megawatts, it's an 18-month project, 12 to 18 months, let's say. So it has some of the same, probably not as dramatic as gold, but it does, to materially react to the price requires, let's say, a year plus. And one of the problems is that by then the market could have changed dramatically, right? And we've seen that when if we look at 2022, late 2021, early 2022, a lot of money went into mining new projects that didn't come online until late 2022. And they invested during the peak of a bull and came online in the middle of a deep bear.
Ouch. Yeah.
Yeah. And which, by the way, also means there's a secondary effect of a bull market typically, which is the cost of equipment goes way up. So not only are you kind of overpay for the servers and the transformers and some of the key pieces of equipment. So ironically, just like buying Bitcoin itself, the time to invest capital into mining, I'm not saying by mining stocks, I'm saying invest capital in mining, is in the middle of the bear. Like you got to have the balls to go put the money up
knowing that
when everything
looks coming. Yeah. And then you'll be online when it happens. So Bob, you mentioned earlier on, that Bitcoin's a commodity. And I think that's an important thing for people to understand because investing in commodities is very, very hard. And there have been great fortunes made in commodities. You guys like Robert Friedland, you get in copper, and and there've been great fortunes lost in commodities, the Hunt brothers and others, and because they're very volatile. And you know, Jeremy Grantham may have on Auto, one of the best value investment shops in the world. He said there's been, the commodity investing is an area where you can get incredibly rich, but it's almost nobody can do it because you have to be willing to play 5 and 10-year cycles and be willing to hold through the cycle. And there's enormous career risk for a professional money manager in doing that because you're evaluated on your annual performance. And that's why, I've been managing gold stock funds since '08, and it's really brutally hard. I mean, and when you're right, you just look incredibly right. I mean, my fund was up 175% last year, but full disclosure, there were other years when it's down 30 or 40%. So it's a very rough ride, and that's the case with Bitcoin too, because it's a commodity. It follows a commodity-like cycle, and we all know. I mean, to me, probably the biggest thing that prevents Bitcoin from just becoming global money tomorrow is this volatility, this early stage adoption volatility. And I know really smart monetary people who are like, yeah, I get why it's better money than everything else, but until the volatility dissipates, it's not going to be money. And there's somewhat of a point to that, but it's emerging as money, and the volatility, as you pointed out earlier, Bob, is going down. And so, it's both the cost and the opportunity of being where we are right now. I mean, literally, this is a once in a lifetime, once in a generation opportunity to build enormous wealth. And those of us who deeply understand it, feel that and are convicted about that in our bones, that we're going to end up with all the marbles and be incredibly rich. It's going to be gross. But in turn, there's no free lunch in the world. And so, you want that reward, you got to handle 50 to 70% drawdowns, right? And that's, so it's a mindset you got to get your head around, and the average TradFi investor just can't do that.
Abundant Mines is an Oregon-based husband and wife-owned Bitcoin mining company making Bitcoin mining accessible to investors of all ages and experience levels. Their fully managed white glove service allows you to own all of your own equipment and earn steady Bitcoin-denominated income without lifting a finger. Whether you're starting with 10,000 or 10 million, Abundant Mines is your one-stop shop. No overseas call center, no surprise upcharges. With one-on-one onboarding, consulting, and help navigating both Bitcoin and the Bitcoin mining space at every turn, you can rest easy while Bitcoin flows to you 24/7. Learn more at abundantminds.com.
Bitcoin Well is the best place to be buying and selling Bitcoin in Canada and the US. And now with Bitcoin Well Infinite, it's also the best place to be making large buys at their OTC desk of over $50,000. Their white glove service gives you fast transactions, no slippage, and the lowest fees. You can scan the QR code on the screen or simply head to bitcoinwell.com/BTC sessions to sign up today. And you can share your own personalized referral link to earn commissions. When I first got into Bitcoin, I was overwhelmed. The jargon, the security risks, the fear that one mistake could cost everything. I remember staring at my screen and wondering, are my keys safe? Did I do this right? That experience is why I started BTC Sessions. For over a decade, this channel has helped millions of people like you learn how to use and secure Bitcoin. But I realized something. For many people, videos aren't enough. Everyone learns differently. Some need to ask questions in real time as an expert walks through their setup, their goals, and their threat model. And certain things like advanced cold storage, inheritance planning, privacy, and node or mining setups often can't be fully solved by watching another tutorial. So I built BTC Mentor. I recruited the best Bitcoin educators on the planet to work with you one-on-one. Real experts, real answers, personalized hands-on guidance tailored to your exact situation. Whether you're brand new or building a complex setup, we meet you where you're at and walk with you step by step. By the end, you don't just hope your Bitcoin is safe, you know it is. If you're ready for that level of confidence, then head to btcmentor.io and book a call with us today.
They get a 50 to 70% drawdown. They're like, screw it, I'm out of here. I'm just not riding this wave. And so that's why it's such a tough thing for people to get their heads around. And that's why, there will be very few who will be able to hodl through it all. But those of us who do, we've been rewarded thus far, and I think we'll continue to be rewarded. And it's also why you're not too late. I mean, people say, well, it's 100,000. I was too late. I was getting this 6 months ago. Oh, it's 100,000. You bought it cheaper. I can't buy it. Well, I finally convinced them to buy it, and now it's at 60. And instead of looking at it and saying, hey, it's a 40% off sale, they're like, oh shit, it's broken. I can't buy it now. Like,
Yeah.
well, which, you can't have it both ways, right? I mean, okay, you want it to feel great, 100, 120, you can buy it and buy it high. And, but it's, eventually enough people are going to come to realize that this is really a case of you buy the dip on this asset. And, and it gives you, if you're wrong about it at any given point in time, it gives you an opportunity to quote unquote get right about it on the next dip.
But Larry, on that same note, not those same people, but a lot of people will tell you that it's too high, and they'll say things like it's 69 or whatever. I had several friends saying, oh, I think it's going to get down under 20 and I'm going to buy then.
Well, that's
and
right.
It gets down to 17. And then I see them months later when it's gone back up. I said, what'd you get in it? Because it got down to 17. They go, nah, I didn't do it.
No, nobody ever does it. That's right. And that's why, but fortunately with 17 years of data now and a couple of really good models emerging, like this power law model with a, 96% R squared, you can actually kind of come to understand how the asset's going to behave. And, as a financial investor, what I've always looked at is you want pattern recognition. And in my book, I laid it out, you can see these drawdowns, what they are, how large they're going to be, that they're coming, and then you can look at the power law. I mean, I highly recommend people buy Fred Krueger's book, Bitcoin 1 million. It lays it out clear as day, and all the supporting arguments are brilliant. And, what you can see, I mean, what I'm kind of modeled towards is in 2032, which is admittedly 6 years away, the mean on this thing is about $1 million a coin. So, if I buy a coin for 100 grand, it's going to be a 10 bagger in 6 years. That works for me. And hey, it's even better if I buy it for 67 grand, and it's going to be $1 million in 10 years, 6 years. That works for me too. So, I think, and this is the argument for dollar cost averaging, because we just never know where it's going. And I've also always been a proponent of that. So it's a tough asset for people to get their heads around, but once you get your head around it, you'll develop the conviction that I have and that you guys have and that Saylor has and that others have. And I think, it's what is it that people say? It's time in the asset, not timing the purchase of the asset. I mean, this thing's going to be worth $1 million in 6 or 7 years, and it's going to be worth 10 million in 20 years. And so, if you buy a coin today, you're going to be really glad you did that, in my opinion. But you got to wait, and 20 years is a long time.
Gary, you were at a meetup yesterday, I think you said, right? The Dallas
last
meetup.
night.
So
I was buying that book. I'm sorry, I was buying that Bitcoin 1 million.
Okay,
Yeah,
that's okay. What was the sentiment there?
It was a smaller crowd than normal. I can tell you that, because usually I go there and there's like 60, 70 people there, and there were maybe 35. So the crowd was down, and they were surprised the crowd being down. But everybody there, except for 1 or 2 new people I met who just got in at the high, no one was worried. They were going, oh, we've seen this several times, so talking like us.
They're
so the
a
sentiment
seasoned group. So, which could be indicative of a 35, right? You had half of the normal audience.
The guts to come. The other 30 were back at home crying.
That's what I said.
Yeah.
I said their wives wouldn't let them come.
Yeah, their wives wouldn't let them come. Get out of that shit.
And they're embarrassed to come say I'm out of it now.
Yeah.
So, but actually, most of the people there, and now that I'm thinking about it from that aspect, I knew almost everybody there. So it was definitely seasoned people. I think there were like 5 new people that I met, that I didn't know already. So I don't know if that's a good indicator, of anything on that group there.
Well, I have, it's one of 3 data points that I wanted to kind of gather, and I think that's an interesting one. Another one, Larry and I are part of a group here in Naples, Florida. What we call, I don't know. It's a bunch of older, primarily business executive leaders from the past. People like one of the guys, the ex-CEO of Union Pacific, and guys from J.I. Case and former guy from the CIA, NSA, like that sort of group. And Larry and I got several questions yesterday from the group. I don't think anybody was like super negative, but they were kind of questioning, right? I'm not sure how you would categorize that sentiment, Larry.
Yeah, I think that's right. I mean, it's very easy. I mean, they're doing what most people are doing is, oh gosh, it's not working. You said it was going to keep going higher and it's not going higher. And I said, yes, it will, but with volatility, as a part of that journey. And so there's nothing fundamental about the thesis that's changed. They're still debasing the currency. This is still digital gold. It's better than gold in a million ways. You can move it faster, store it cheap, verify it more completely. But, it's going to take time. And I think that's one of the hard things Bitcoiners have had a hard time dealing with. It's just how well gold is done. My view is that, that's just a function of the fact that gold's been around longer. And when people, come to the debasement trade conclusion, which I think more and more of the world is coming to, they go to the old tried and true, and central banks buy gold and they're not buying Bitcoin yet. But again, you can look at that as a negative and be bothered by that, or you can look at it as a positive that, hey, gold is signaling that our stuff's about to work. And furthermore, gosh, isn't this amazing? The market's giving us an opportunity, if we don't have enough, to buy some more at 40% off or 50% off actually from the highs.
Yeah, people don't get that at all. I mean,
No, they just don't.
If they're new, I mean, you don't.
Yeah, they just
all
don't.
you know is you paid 130 for it, and you're down half. And that's a lot, as you said, maybe because it's a commodity instead of a stock.
No,
But it
that's
is.
right.
It's a volatile asset, and that's why it goes up a lot, because it's a volatile asset.
Yeah, exactly. I mean, so it is what it is. And I think the only way you can get to where we are is by time in it and an understanding of what it is. And, there are a lot of good books on it. I've got one, Safe's got one, Lynn's got one, Kruger's got one. I mean, there are ways you can educate yourself about it, and you'll come to the conclusion I think we've come to, which is, this is as good a place, or probably the best place, to store long-term wealth in a monetary debasement environment.
What are you going to do? Put it in fiat and take it out and put it in
right?
fiat?
I mean, that's the other thing. You're going to sell. Where are you going to go?
Yeah.
Where are you going to go?
Well, one of the reasons I brought up this group that Larry and I went to yesterday was, I think you had to leave a little earlier than I did, Larry.
Yeah.
Is at the end, I hung around probably till like 2, Larry, just by the way. And there were 3 or 4 guys. So there are 3 people coming out of that meeting. These are very high net worth people, we'll just say in general, right? Very high net worth people. I'm quite convinced that today 3 of those people are buying their first Bitcoin.
Interesting.
Huh. And now I think 2 of them are buying an ETF, and one of the guys probably going to Coinbase. So, those out there who are Bitcoin maxis and purists, don't get upset. But these are new people entering the ecosystem with deep pockets, and they're probably gonna enter with, maybe a couple $100,000 kind of investment would be my guess. Like that would be how they would enter. But the thing about these folks, and remember, these are very successful folks, and they're older, they've seen the cycles. They view this downturn just like we were kind of talking about. Like, hey, this maybe is the time. This is my chance. Because I've been in this group for like 6 years and been telling them to buy, and they never bought. Like, oh, now I got a 50% drawdown. Maybe now is the time. So I found
actually the guy, the new member that I brought to the meeting, Bob, won't mention his name. He actually said to me, he said, I'm going to buy some. And he's read my book. He knows it. He believes in all that kind of stuff. He was one of the, God, 100, 125. God, you got it cheaper. I'm not going to chase it. And we were riding in the car on the way home, and he kind of said, gosh, if I want to get some of this, now's probably the time to do it, right? It's 50% off the all-time high. And I said, yeah, I think it's going, the long-term thesis hasn't changed, because of all this FUD, it's down 50%. And it's like you say, I mean, he's got a huge net worth, and he's not going to spend a ton of money on it, but he's going to buy probably $100,000 or, buy something on it and get started. And then, then he'll start watching it, and he'll, I mean, it's like, and another Bitcoiner is born. Right?
Yes.
Yeah, you mentioned, Bob, one of them was going to buy Bitcoin at Coinbase, and the other two were probably going to do ETFs. And my question to you that brought up is, do you think part of our drop this time has been due to people buying ETFs, and they feel like they're buying stocks, and they don't even know what they have? They have no idea what they have. They just know they own an ETF, and they see the price dropping, and they just sell so easy online. Just so I'm getting out of that stock. Just like they would a stock.
I can only, I mean, I'd just be speculating, but probably, I think people viewing it as a stock. Yes, I think that's true. And I think we saw, maybe the start of the fall down, not the latest drop, but the drop from the high in October, some profit taking mentality that kind of started that when we were in the 120s. Some people that had done really well and are used to saying, oh, well, I just made 40% in a year, so I'm going to take some off
I'm happy
the table.
with 10. 10 would be fantastic, and I just made 40.
Yeah. But,
yeah, there's no doubt that there will be those who chase it and then sell it and trade it. The thing that's tricky, and there was a very high-profile analyst who, looked at the technicals and suggested this call, and he made a good call. It was going to go down. The thing that's tricky with all that is it's a short-term gain. You got to pay tax on it. And when are you going to get back in? I mean, it's okay. So you sold, great. You're a genius. You sold it for 95 or 100, or maybe you sold for 120. Are you going to have the guts to get back in at 67, or are you going to hold up for 40 and never get any more of it? You know what I mean?
Yeah.
Because it's like the part about selling it when it runs is you got to think to yourself, okay, fine. What am I going to use? When am I going to buy it back? How cheap does it have to get to buy it back? And will I buy it back, or will I be left behind? I mean, I had an investor in my fund who sold it at 90 something, and then it went to 125, and he was experiencing regret. Now he didn't go and buy it at 125, and I'm trying to get him to now buy it at 67, and I'm not sure if he will or not. I'll probably wait until it starts to turn, but it's also a levered asset with really rapid flows. And one of the things you'll learn if you read that Bitcoin 1 million book, Gary, is that from 2018 to 2024, it went up like 6x. Okay, something like that. These are round numbers from memory, so I'm perfectly right, but the idea is right. And if you miss like the best 20 days of that period, you were flat. So, this is the God candle phenomena, right? I mean, it's a very volatile asset, and when it really runs, it runs hard. And so think about that. I mean, in a 6-year period where it multiplied in value by 6x, if you missed the top days, you didn't get it. And so for that reason, that's why I just don't trade it. I don't think you're smart enough to know what it's going to do next. And if you're not there when it goes on a tear, you missed it. And so
it's hard to buy when it gets up again and you missed it.
Well, that's exactly right. You sell it at 100, it goes to 70. You're hoping it goes to 60. Well, what happens if it suddenly, Worfs comes in and they do a big QE program, and the next thing you know, it's at 140. And now you sold it at 100. You felt like a genius because it went to 70. But are you going to chase it at 140? I mean,
and I know a lot of people who've done that in the past, lower dollar amounts, of course.
Yeah.
But they said, "Oh, I'm getting out of this. I'm a genius." And then all of a sudden, it goes up to 135, and they're going, "I sold 5 of them at 10."
Yeah, it's so volatile and it trades like a wild animal. My view is just, that it's going up and to the right over 4 to, as Saylor says, if your time frame is 4 to 10 years, it's going up and to the right. So just buy it and sit on it. Just hodl it. I mean, it's not. There's, it's not that hard to do. I mean, it is hard if you're a trader to sit there and watch it go up and down. But if you're not, I mean, I don't care what it does any given day.
Yeah. Well, there's anybody that's bought and held for 4 years hasn't lost money. That's still a true statement as of today.
I think that'll continue to be a true statement.
Yeah. And I think that, by the way, that doesn't mean there's this whole thing about 4-year cycles. I think the 4-year cycle is dead. Actually, I don't think it ever existed, to my opinion.
Yeah, I'm not so sure, Bob. I used to say I thought it was.
It looks like on paper it's there.
Yeah, I used to think it was dead, but now I'm not so sure because can't look at the top last 125, whatever. I mean, look, there are cycles, and to me, they're actually more just and they're not really they don't have to do with the halving anymore. because the reward is not what's driving the demand. The reward is trivial compared to the demand from ETFs and everything else. That's not the issue. But I think like any financial asset, there will be cycles of just standard fear and greed. People will chase it and buy it and lever up and get way too far out over their skis. They'll get way ahead of the model price. And guess what? Some people will sell and it'll get cleaned out, and then it'll get way below the model price. And that's where we are right now. And
I can buy that there's a cycle, I guess, a cycle based on that.
Yes.
To the point that you said it, like it has nothing to do with the halving.
Right.
And
no,
I think that the fervor that has come around the last couple halvings, it's kind of fun, I guess, in a way.
Well, Bob, are you saying you don't think when the next halving comes up that like 6 months leading into the halving, it's going to start going up because everybody, it's going to be cut in half. We're going to have this giant thing. People are going to start buying it, forcing the price up.
Well, here's the only thing I can say. The cost of production doubles overnight. So if you look at it from what does it do to the supply, it's meaningless. And it has been meaningless for several halvings, right? It really doesn't affect the amount of Bitcoin getting in the market. What it does do is it doubles the cost of production overnight. So that is a true
and it can hit the miners in a big way, obviously, right?
Yeah. So, we care a lot about it. I should point out, it only doubles the cost of production in a world where the fees are really low, and they are abysmally low right now. And this is like we were talking about FUD before, and I spend a lot of time and effort over the last few years talking about block space scarcity, and I still hold everything I've said about that to be true. That I think ultimately we will find that block space itself is phenomenally scarce, and there will be fierce competition just for access to the base layer. That said, people aren't using the network right now, and that's not good for Bitcoin. It needs Metcalfe's law is, the value of a network is equal to the square of the number of users of the network. But people aren't using the network. And we talked about the ETFs. Well, that kind of takes people off of the network, right? The new people coming in aren't running nodes. They're not running base layer transactions themselves, like these sort of things. And that is concerning. That does hurt. Probably don't want to go too deep into it, but maybe we can do it in a different episode, about governance and things like that. But while Bitcoin adoption has gone way up over the last several years, and we have a couple 100 million people with wallets and all that sort of stuff, there's like 25,000 listening nodes, like what I would call active nodes on the network. That's it, and that's not good. And when we are faced, by the way, with junctures in the protocol and the governance, which you were talking about, Larry, the nodes play an important part in that. And the only people that essentially get a vote, I'll put it that way, the only people that get a vote in those sort of things are those with nodes. They can signal for protocol changes, and if there happens to be some what's called a competing chain, they get to pick which of the chains they're going to follow. Like those are important. Now the maybe a good time to just real quickly hit a couple of the things from earlier before, like quantum. I think the two things that are kind of prevalent in the industry right now are quantum FUD and kind of governance. And I would say, one has legs, and one has a reason for concern and one has no reason for concern. The one that has no reason for concern is quantum. Contrary to, I think, what a lot of people, especially experts outside of Bitcoin doesn't even use really encryption. That's not the way that it works, first of all. Quantum theoretically could have an impact on certain Bitcoin addresses, but we already, even in today's world, of today's implementation of Bitcoin, that Bitcoin can be made safe right now. You just move it to a new address that's never had its public address exposed, and you're safe. Okay, so now, and there are very active groups. There's several of them working on protocol upgrades to create even better quantum resistant addresses. Nothing to worry about. That doesn't mean work isn't required, but the work is happening and we're fine. Probably the thing that's probably more concerning is, governance. And this is what Saylor, like you said, Larry, Saylor is basically said, hey, I'm going to get involved. And he should. How the protocol evolves, who has a say in it, the pace of the change, what are the priorities of the changes. These are big, big deals. And there's something called BIP 110 right now, which is probably not worthy of a deep dive here, but it's caused a controversy. There's somewhere around 7-8% of the nodes are now signaling that they want this change. The potential change would come in late September if it were to come. It's created within the technical community a lot of butting heads. And some of it gets kind of, I would say, vocally violent at this point, or, very contentious. It's my opinion that we have to evolve the way that we make changes. And I think Saylor is kind of saying the same thing, like, hey, the system that's been used and the group of people that have been driving it will certainly a lot of technical competency, but they're very insular. They don't communicate well. They're very closed off to newcomers. And some changes need to be made there because we have a $2 trillion asset now. People all over the world are using it and counting on it. And the old way doesn't work. I would say, by the way, I went through this in the personal computer industry. The way in which we developed products and made changes in, let's say, the early to mid 80s is very different than the way we had to do it by the late 90s. And it was very difficult for the developers to accept that because essentially they drove the bus in the early days, and it was a much wider much wider community that had a say in the later days, and the technical community really pushed back against it. So I think we're seeing a lot of that. It's kind of a psychological thing.
Well, there you go. That's interesting.
Yeah, it is interesting. Look, it's TikTok next block, right? It's just going to continue marching forward, and I feel sorry for people who aren't in it because there's no excuse for not being in it now. There's enough information out there. There's enough time, enough data. It's, to me, it's just blindingly obvious where it's going, what's happening. If you don't want to do the work and take the time to understand it, I mean, one of the things I've been able to do with a lot of my friends is just to get them, and I'm sure you guys do the same, just to get them to get started. It's like, investing is all about asymmetry. And so, if you can only lose 1x what you put in, you can make 5 to 20x what you put into something, well, then you should take and that's, you really do believe the odds are in favor that it's going to work. And you should take that bet, every time, even if occasionally you do lose the 1x. So, and I don't think you're going to lose the 1x here, but I do know that the asymmetry is really there. So, I just try and get everybody I talk to buy some Bitcoin, because that's how it starts. You buy some, then you watch it, then you learn something about it, and it starts to work. Then you buy some more. Pretty soon you end up doing podcasts for most of your life.
I found personally, if you're not talking, I'm not talking about high wealth individuals necessarily, but if you're talking to just regular folks and they're interested in Bitcoin, it's a lot easier to talk them in to start dollar cost averaging a small amount.
Absolutely.
And then all of a sudden, within a year, they get it and they go buy some. because
Right.
because most of those places do a good job of sending out some information, a newsletter, blah blah blah, and they got money in the game, even though it's not a lot, and they read it.
Once you've got a little bit of skin in the game, it immediately forces you to pay more attention. And then, of course, you start to learn, and you realize what the difficulty adjustment is, and and it's just the evidence continues to build and build and build, and you're like, Jesus, why do I only have so little of this? I need to own more.
Yeah,
And
I've had so many times a friend or
Right.
something I've talked into doing a small amount monthly
Right.
or weekly, and then within
Yeah.
6 months I hear from them. They're going, "Oh, I just bought, blah blah
ton.
blah, amount."
Yeah,
So
no, it's
so
exactly right.
It's an
So
easy sell compared to
It
like
really
say to
is.
go on and buy Bitcoin, because then
Yeah.
you got to explain they don't have to buy $135,000 worth and
Well, yeah.
all this stuff.
Actually, that with the guy I was with yesterday, Bob, he's like, well, if I'm going to buy this, do I need to buy a whole one? And I was like, no,
Yeah,
of course
see.
you don't.
Yeah.
Did he ask you if you had one in your pocket? I used to get asked that. Do you
Yeah.
have one on you? I go, wow, I just explained it for 20 minutes and you asked me if I have one. I really
Yeah.
did a shitty job, didn't I?
Yeah.
Well, it's funny you say that, Gary, about doing a shitty job, because I had a little story I wanted to tell you guys. And on Tuesday evening, I had been asked to go speak to a group here in Naples, and it was about 75 people in the room. I would say 80% boomers, by the way, but a few younger people in the room. And they had asked me to come speak about Bitcoin and money. And so I'm not going to give you the whole presentation, but I started with some basics like, what is money? What's broken in the system? Like these types of things before I got to Bitcoin. And then I thought what I gave was a pretty good, compelling reason why Bitcoin was important, and encourage them, much like you're saying, Gary, to maybe dabble a little bit. Basically, nobody in the room owned any, right? Super novice group, and told them to buy it with the expectation that they would hold it at least 4 years before they evaluate it. The whole thing. And I should point out, I went through what I thought was a decent primer on Bitcoin. Well, we opened it up for Q&A. And one of the first questions was from an older gentleman. And I would say he was almost angry, at me. And he said, paraphrasing, who's the head of Bitcoin? Who makes the decisions? Until I know who that person is, I'm not going to trust anything. And how do I know that the Russians aren't going to just hack this thing? And obviously he hadn't listened very well, or I did a very poor job of, communicating. And I tried, I probably both of you guys, I know you both do a fair amount of public speaking, so you get these kind of confrontational things, and trying to stay professional, at the beginning. And so I responded with, hey, you have to get comfortable with decentralization, and, Bitcoin is about not having a trusted third party, and things I had actually covered, of course, earlier in the presentation. And he came back, same sort of thing. Like, basically, it's a Ponzi scheme. It's, blah, blah, blah. So what I said was, well, sir, you've obviously, you're obviously in the back nine of life. So you were around in 71 when Nixon took us off the gold standard. How do you feel about the fact that your money's been devalued by 95% since 1971? Are those the people that you want to trust? Is that where you want to place your faith?
Great question.
Yeah.
And boy, he got really red. He didn't. Not that it was a debate or anything like that, but I find it's funny because like when you go to a show like that, there were 20 other questions. They were great questions. I'm pretty confident several people walked out of that room and bought Bitcoin.
Good.
But what's funny is it's always the one guy that sticks in your head, right?
Yeah, right.
That you wonder, like, what what's going on in his head, and the takeaway I had from it was that it's indicative of I think people in society that really want to be a slave, that they want there to be somebody else that's in charge, right? And that's where their comfort comes. Like, and it's there's always going to be a group of those folks probably, and just have to accept it. But
I think that was a great question you asked them. I mean, I'm going to put that in my back pocket too next time I have some kind of situation about trust.
Yeah, but the desire to trust people. But I think that's where kind of the whole socialist movement comes from. Like, there's the whole group of people, they want to trust the central planner. They want to trust the authority. And
no matter how many examples they see of bad.
Yeah. Because I said to him, I said a couple of things, and I said to him, I said, sir, history is not on your side. Every currency ever created by governments is essentially failed. And I don't know why you want to trust it. So
some people are more comfortable in that world. I mean, the thing that I think we all have going for us is that, I mean, now you literally week by week, hour by hour have examples of why none of these people have been should be trusted. I mean, we now know that, many of the leaders of our country and other countries and so forth have compromised in this Epstein thing. And I mean, it's just one, outrageous example of broken trust after another. You know what I mean? I mean,
right.
How anybody can look at the system and go, oh yeah, this is a good system. We should just trust this. I mean, give me a break. I mean,
people of low moral value, when they get into any kind of position of power, are going to stoop to the lowest they can with that power.
Many people, not all, but you're right. Many, I agree with you.
Well, I'm saying people with low moral value.
Oh yeah.
Now, I'm not saying good people. Like, I believe you guys would be okay.
Yeah.
But if you have no morals to begin with, and you're given a bunch of power,
you're gonna do whatever. Yeah. No, look, it's to me, it's just as obvious as day. It's interesting. I mean, it does shake some people's worldview. I mean, if you're a statist and you believe in the state and you believe in government, self-custody, for example, I mean, freedom is uncomfortable. I mean, you've got to take responsibility, for yourself and for others. And some people don't want that. They actually want to believe that there's a nanny state that's going to take care of them.
I think that has to do with kind of something Bob mentioned. Maybe it was you, Bob. Maybe it's Mel mentioned it before we started the show. A lot of people in today's society, we've had such a comfortable life here in the United States for so many years. I mean, we're like, 200 years now, or whatever, or however many years, that they don't have, they feel like that everything's great, that the United States is, I remember my wife, to change the example, told me back in 79, oh, the United States will be here forever. This is the greatest country ever. I go, really? I'm going, Rome was there 500 years and it disappeared.
Yeah.
So people have that concept, that slowly but surely that's breaking down. But for the most part, older people have that concept, because they've never seen anything happen.
It's not unrealistic. I mean, I don't think it's all going to devolve and fall apart tomorrow, but we can see, and I think we'll see radical change. I mean, I think that, the next generation is not going to put up with this shit, and they shouldn't. America will probably be here in some form, but it may not be the form that we're in right now. This next generation is just not going to put up with this shit. And, this fourth turning is going to create some massive reform, and it should, because we all look at, we watch what we see on the news every day. We watch people testifying in front of Congress, and we're like, what the hell? This is just not right.
Well, where do you think we're at in the fourth turning? I mean,
so I think
are we just at the beginning, or are we in the middle? I know we're not at the end. So,
well, my view is the beginning was 2008. That was when the fabric started to tear, and that we're now deep into it. That I think it, most fourth turnings have lasted between 20 and 30 years. So 20 years would take you to 2028. 30 years would take you to 2038. I don't think it's going to take all the way to 2038, but it could. I kind of tend to think that the culmination and the reset will occur in the early 2030s. I think that I've said this in other pods. I'll just briefly recap it. I think that basically, blue team or red team's going to lose in 2028 for a variety of reasons. I'm not going to argue those, and then blue team's going to win, and blue team's going to go UBI, debt forgiveness, low interest rates, print money, and they're going to trash the currency. We're going to have inflation like it's going to melt people's faces. And so that's from 2028 to 2032, and it may be Weimar style or it may be just really high South American style. But in either case, everyone's just going to be like, do whatever it takes to stop this shit. And I think in 2032, Michael Saylor is president. I think he stands up and he says, I've got the receipts. I'm an engineer. I know where we went wrong. The money is broken. I'm the richest man in the world. Doesn't really matter. I'm going to give it all away anyway. And here's how we refine it. We reset the system, guys. We're going to go to a Bitcoin standard and we're going to have a constitutional convention so that, the original vision of the founding fathers is reenacted in things like term limits and, the ability to fire judges and just there'll be massive reforms and he will have the credibility to pull it off, and everyone will be hurting so bad that they'll be begging him to do it. That's
I've never had a president follow me on Twitter, so that'd be kind of cool.
Yeah, right. Exactly. So I mean, that's my dream case. I don't know if that's really what'll happen, but I think the problems will get severe enough in the early 2030s that, a solution will emerge. I mean, they'll be able at that point in time, enough of the boomers will have died off. They'll be able to reform Social Security and Medicare. They'll be able to balance the budget. A lot of things will happen, and the next generation will be taken over, and they're just not going to put up with any of the shit that's going on right now. So I think the bad news is it'd probably be a pretty rough 6 years. I think the good news is, on the other side of that 6 years, we're going to go back to first principles in America, which, is founded as a sound money country with gold and silver being the only forms of money written in the Constitution. In this case, I think it'll be Bitcoin, and that in that respect, we'll leapfrog China because China's made a bet on gold, which I think is a mistake. They're making the same
And they
mistake.
made a bet on silver one time before, which
Exactly.
was
They
a
made that,
mistake.
and we screwed them as a result of it. So that's
Yeah.
kind of how I see it unfolding, Gary. I don't know if that's really what'll happen, but that's just a guess.
Yeah. Obviously, we all have, a murky crystal ball.
Right.
But what I would say that is interesting right now is if we zoom out globally, we have a serious secession movement in Canada with Alberta. We have an Iranian revolution on seemingly simmering. We have Venezuela that may flip. Looks like Cuba seems to be falling apart. Costa Rica just elected a woman as president, basically following the Bukele.
I didn't know that.
Yeah.
Yeah. And so there are these spots in the world where, the revolt is coming. I think, we see Italy and Japan. Like this, I think is actually really cool. Super strong female heads of state who are pushing almost a radical shift against socialism,
Yeah.
protecting national sovereignty. Poland's always been very strong about it.
Mm-hmm.
So those are the things that give me hope, frankly.
Yeah. I agree.
That but on the other hand, we have Mondami being elected in New York, a similar person in Seattle. We have this sort of bullshit happening in the U.S. And, it may come back to it. It's interesting in Atlas Shrugged, the U.S. kind of falls first. And I think in their case, in the case in the book, it's more Europe that kind of went the right way. I don't think Europe's going the right way. They're really bad. They're way down the wrong path. But these other areas of the world, people get it. They're revolting against all these things.
It's all coming. It's coming our way, but it's it's messy. It's going to be messy. That's for sure.
So Gary, we have your conference coming up. I think this show, by the way, is being recorded on February 13th, probably released a week or so after that. So as people are listening, Larry and I will be joining Gary in Texas for BitBlock Boom in early April. And if you're looking to gather with other Bitcoiners, it's a great conference. I've been there several years in a row now, and I've always found it to be one of the better gatherings. So if you're looking to connect,
it's a human scale conference with a lot of good speakers, and I'll have books there for sale. If you want to buy a signed hardcover, I'll be able to sell you a book.
And we actually have several people. You're signing books there. We have Jimmy Song's there signing books. We have Parker Lewis is there signing books. This will be. Yep. I'm kind of excited about this year's event. This is our 9th event, which makes us like the longest running Bitcoin conference around. But we're doing it in Fort Worth in what's called Cowtown in the stockyards. And if you've watched any of the shows by Sheridan, like the 1870s, when they go out west, they're in the stockyards. They just bring dirt on the road and make it look like, because it looks like it did in the 1870s.
Yeah.
Landman, when they go to the restaurant at the Cattleman Steakhouse, that's down there in the stockyards.
Interesting.
So I can't wait to go to that. I love Landman.
Yeah. Landman is the hit. We watch that every night, but it's in that area. So it's going to be really cool. And there's a cattle drive that'll come by Saturday. Every Saturday, Longhorn steers, they do a cattle drive. It's more for a show than it is real. It's probably the same cattle every week, but it's kind of neat to see the Longhorn steers come by. And we're in an old rustic place that has been there for years and years. And because of where the event is at, in the room we have, it's a big room and it's got brick flooring and hard walls, and the tables in the back. So we're doing something that we've never done at BitBlock Boom is when you check in, you're handed a set of headphones. Now, like on Friday, when this workshops are going on or the sessions, 3 are running at the same time. And with side by side is the way we're doing it. And you could be sitting over here watching the mining sessions and you go, I wonder what these other ones are. And you can switch the channels and listen to the other sessions and say, oh, wow, I really want to walk over there. You can just walk over there and listen to the lightning session, sit down and watch it. Or if you have to go to the restroom, you don't have to wait for the break. You still got your headphones on. You still can go to the restroom. And then Saturday, of course, there's one stage. So all the headphones and a BS. So I think this is really cool. And I know several people who've been to conferences with the headphones, and they really, really, people seem to like it a lot. So I'm curious to see how this goes. We're trying to do one of our parties at a rodeo, the Thursday night event, which is going to be really cool. And then we have, it's just going to be, this year, I think everybody, especially people who come from like Australia or Europe or even up north, when they come to BitBlock Boom, they're thinking they're going to be seeing cowboy stuff. And they don't, because it's been in Austin or in Dallas, and that could be in any town USA. Where this time, they're going to see cowboys walking around. As soon as you walk out of the venue, you go 4 feet, and there's a cowboy hat store, and there's a boot store. So I think people are really going to get a good taste of Texas.
Yeah, it sounds fun.
And also just want to mention, if anyone is interested in checking out the site and decided to come, we have a discount code. I'll just give out Mel's code. It's Mel10. That'll give you 10% off. But check it out. We're going to have a good crowd. It's a Bitcoin only crowd. If you like Bitcoin. Yeah, I talked to someone last night was telling me they went to Archipelago and all these places in there in Dallas. I said, so you go all these places and you hadn't hit BitBlock Boom and it's been here like 9 years? Well, I didn't know about it till tonight, so so we should have a good time. Thanks for bringing that up. And like I said, we got a panel with the boomers on it.
Yep.
So we're gonna have
our buddy George. Our buddy George is going to come in, our first guest on this show, and we'll do a panel with him. So that'll be great.
It's going to be a good show. It's going to be a good show. People will enjoy. You guys will like it this year. You really will. You'll like this stuff around, and everything's in walking distance. The hotel is literally 2 minutes. We're using an outdoor venue, a different venue, not outdoors, but it's outside of the hotel. But the hotel is 2 minutes from the venue. And like everything, the parties, everything are in walking distance pretty much. Instead of having to rent an Uber or, because I don't know if you were there when we were in Austin. the second year to go to that city I rented. It was a 45-minute drive, you know.
Yeah, I was at that one. Yeah, that was
that was a
that
good
was a
deal,
hike.
but it was a long drive.
That was a hike.
It was. But not many people rent a whole city like that to.
Yeah, no, that was fun. It was well done.
Yeah. So yeah, well, as I said, I'm a big fan of your show, Gary. I'm going to a lot less this year, by the way. I think Larry and I have actually talked about this. I think Larry's of the same mindset.
Yeah.
We're probably not going to be as many places as we have in the past. It just there's a lot of shows. You know, if you got one in your area, I certainly encourage you to go to it and gather with other Bitcoiners. But you know, it can get draining, and you know, because you could go to one almost every weekend. There's somewhere in the world, or every week, almost everywhere in the world. And so
There's a big
I frankly been to too many the last handful of years, and I have to a little more time with my family, a little more focus on my business than previous years for me.
Looking forward to it though, Gary. Should be fun.
Yeah.
So we'll have a good time this year.
Yeah. So I don't know if you guys have anything else thought we should cover today, but I know next show we're planning to have Joe Kelly from Unchained Capital, and we'll talk about some security and scams and custody and stuff like that with Joe. And
I love Joe. He's a great guy. And Unchained's been our platinum sponsor for like 7 years.
Yeah, great organization. I do use them personally and for some of my businesses. So I'm a big fan. That's an unpaid plug, by the way. But just to be clear, I really do use them and like them. So look forward to having Joe. All right, guys. Well, I think
good to be with you guys.
That's about right.
Thanks.
Enjoyed it completely. I'll see you guys next month.
Likewise. See ya.
Hey, you. Yes, you watching the Bitcoin price movements and the latest exciting news. It's awesome to stay informed, but the real power of Bitcoin comes from taking control. Don't just watch, take action. Head over to btcsessions.ca/learn for free step-by-step tutorials that guide you through every major skill you need to know, plus full video playlists for deeper dives on any topic you like. And if you're ready for the ultimate fast track, scroll to the bottom and check out bitcoinmentor.io for premium one-on-one experience with my team of Bitcoin experts to ensure you get it right the first time. Don't wait. Secure your Bitcoin future today. Hit the link in the show notes or scan the QR code on the screen.
If you enjoyed this episode of the Bitcoin Boomers, please do like and subscribe, and check out the previous episode with John Hybush.